Our next panel looks at the infrastructure layer as well. It looks at the infrastructure layer behind the future of the digital euro. Please welcome lead digital money at KPMG and DEA's very own Vice Chairwoman Anne-Sophie Gógl, together with her esteemed panelists. Please come on the stage, everyone.
Thank you very much. And hello, thank you for the welcome to the panel. It's a Euro settlement stack, Pontes Progress Ambitions for Appia. And I welcome Adeline Bachery de la Banque de France, Marco Kessler from SIX6 Digital Exchange, Christoph Hock from Union Investment, and Bert Staufenwil from KfW. Please come to sit with me. Oh, can we have a slide? There you go. Now you can read the names as well. Great. Yeah, welcome to stage. So as we heard today, we are moving from experimentation to implementation. And yesterday, the ECB just published the service description for Pontes, which seems to be some kind of implementation guide for market participants to Pontes. And I guess that's a strong sign that we are not longer in discussions, but moving into implementation. And I'm very happy to have a panel here with me that reflects the full ecosystem: central bank, market infrastructure issuer, asset manager, and issuer. So to start first with the first question, I would like to short introduce yourself. Answering the question, when you first entered the world of settlement infrastructure, did you ever have the moment where you thought, wow, the system is incredibly complex and maybe a bit old-fashioned? This definitely needs modernization. Or what originally drew you into this field? We start with Adeline.
Thank you. It's a difficult question. So first, maybe you know, at the Banque de France, we regularly switch departments within the bank. So when I entered the Financial Market Infrastructures Directorate, FMI, so Financial Market Infrastructures, were completely new for me. And yes, my first impression was, wow, it's so complex. So this wonderful innovation, I think, has helped me to cope with this complexity. But maybe also it was useful for me to learn about the background of financial market infrastructures and how it works in the current world, and looking beyond the technical side of plumbing. It's very important to understand the concepts of our job. So, for instance, understand why optimizing liquidity is so important is crucial. So I'm not saying that we will only replicate the current market into tokenization, but we need to take it into consideration when designing the future.
Thank you. How about you, Marco?
Thank you, and hello, everyone. Yes, definitely. Although I would say at the beginning, settlement looks like, well, you just move something from here to here, right? I mean, what can be so complex about it, right? And then you learn about matching, instructions. Oh, right, there is a good reason for that, right? And then you learn about, the actual life cycle of assets, and how they interplay with settlement assets, with money. And then you learn about the stack, right? The stack of market infrastructures. And you're still just at the plumbing level. You're not even yet at the actual policy levels or investor protection level and all of that. So yes, definitely, I keep learning about complexity still today, I would say. Yes, but my background being in transformation, even prior to joining CBDC Group, always digitalization, digital transformation. Now with new technologies, DLT and blockchain related. So I think it's about managing complexity. And to the last point about, complexity, I think if you look at today at systems which were designed maybe 20, 30 years ago originally, or 10 years ago even, I think it's normal to see historically grown complexity, because I'm pretty sure whenever somebody designed a system which is, let's say, traditional today, they didn't think of it as being complex. But complexity grows, keeps growing, and this is just part of the game.
Thank you. How about you, Bert?
Thank you for being here. We started in 2016 looking at blockchain and understood you have a token, you have an asset, you put it in a smart contract, and then it's exchanged. So that's in the ideal blockchain world. Then we decided to do a real project. And usually when you start a project is you draw the current system. And the current system is you have, in our case, the dealer, you have Bloomberg, you have us, you have CSD. Usually the CSD also is having an IPA, so an issuing paying agent with him, and so on. And so complexity grows. And the unfortunate thing is that everyone has their own data silo, and they can't agree which data basically is right. So therefore you have someone in the middle. So that creates complexity and time. And through this, basically, we understood what could be done on the one hand, what needs to be done, but in Germany the framework was not ready in 2017, so it was rather difficult to do something on this. So therefore we decided to do a simulation trade, which is clearly traded because you had to have the physical document for a trade, and the physical document on a DLT is not possible. So therefore we looked, what kind of steps needs to be done, and fortunately, and I think we come to that also during the panel, some regulatory things have changed, some law things have changed, some mindset has changed, and therefore it's interesting to see how it developed in a rather fast time, at least for an adoption standard.
Thank you. Yeah, Christoph, what was your way into that ecosystem?
So when looking at my career in financial markets, Anne-Sophie, I think it's fair to say the only constant factor in financial markets is change. And my original DNA was in trading, and I was in my first years in markets open outcry trader for Dresdner Bank here on the Frankfurt floor. And then I was part of the development team of Deutsche Börse, setting up Xetra, the first electronic trading platform. Then during my times, while I was running a hedge fund, we've been one of the first users of algo trading. And when looking nowadays at financial markets, you really question why on earth do we need in paper format a physical global document? Why do we have settlement cycles when going into a new bond issuance of T+5, of T+7? Why does it not work in a quicker way? Why do we take risks? Actually, we do not want to have. And then when looking at the settlement of transactions, why do we need reconciliation processes in a fully automized world? Does it not work in a much better, easier, less costly way? And I guess when raising all these questions, you easily come up with the tokenization topic. And it's not only about tokenization of assets, but to really raise full efficiencies, you also need digital cash rails. And that's our topic here, and very happy to discuss wholesale CBDC.
Thank you. Yeah. Before we deep dive into Pontes and Appia, the dual track strategy of the ECB, we will just have a quick recap. We had the Eurosystem wholesale experimentations going on, involved with financial institutions, infrastructure testing, DLT settlements, and central bank money. What were the key learnings the Eurosystem took away from this experimentation that you did take your choice to move on into Pontes, and that influenced your choice?
Yes, so maybe the first, I see three lessons maybe. The first lesson to be learned from this exploratory work in 2024, the first lesson is a success. Between May 2024 and November 2024, so on a very short period of time, we brought together 64 participants, including central banks, fintechs, industry, banks, and DLT operators. We conducted 50 plus trials and experiments. And so trials, yes, involved real settlements in central bank money. And nearly 1.6 billion euro in central bank money was settled. So this is the first lesson, success. The second one is the high demand for central bank money in the tokenization sphere. It's not just mandatory for financial institutions to settle financial transactions on systemic markets. Financial institutions do want to use central bank money to secure their interbank settlements. And so actually we pose an old but fundamental question of the role of monies in the economy with central bank money and private monies. And trust, I think, is at the heart of this relationship. And central bank money brings trust, and so we need trust even in the tokenization sphere. So this is the second lesson. And the third one, so beyond the technical reasons we could have, but we like to focus here on the collaboration we had between private actors and public actors, and between private actors. So as you know, post-market is crucial, and it's a very competitive sector. And it was very exciting to work together and to bring together, to align stakeholders on the potential benefits of DLTs regarding the functioning of markets, for instance, the fundamental function of an exchange, from trading to post-market activities, to custody, for instance, or on cross-border payments. And so with the success, with the role of central bank money, and with this incredible collaboration, we have the foundation for Pontes and Appia now. Yeah.
Thank you. Marco, do you agree, or is there still something missing for infrastructure like SDX to settle these transactions systematically in central bank money?
Thank you. Well, first of all, as SIX Group, we have to clarify, we operate two financial market infrastructures, for two markets, for the Swiss market, for the Spanish market. So, and obviously situations are different across geographies, right? We have a live pilot in Switzerland with the Swiss National Bank for the usage of central bank money in the infrastructure, and in Europe we have participated in the trials and experiments mentioned earlier, and also in the Pontes program in the contact group. So having said that, I think it's, the pace is fast, I have to say. I know from private market, private sector perspective, it can never be fast enough, so to say, but I think from my observation point, the pace is fast. What is important, I think, is to continue on that pace, and also to come to a realization following the roadmaps that have been also published very recently about the contact groups. I think I want to make something clear, though. It's very important from the point of view of a market operator like SIX Group. We need central bank money to have the safest possible way of supporting interbank settlement. That's clear, that's been mentioned before, and I fully agree with that. At the same time, we stay a bit in the middle, because we need the market as a whole to develop and think about use cases leveraging these settlement assets. So, so to say, the story doesn't end there, basically. And I think this will be very important for general adoption. It's one thing to have the enabling factors, and central bank wholesale, central bank digital money is absolutely required for that, but it doesn't stop there, because to really see the benefits in action and the full picture of this mosaic, basically, you need to also have the market participants, including banks, issuers, investors, to focus on effective use cases that bring those benefits to life, leveraging central banks or digital money.
So it's a call to Christoph, I guess, yeah, as an asset manager. So where would tokenized settlement create the real value then?
I'm more than happy, Anne-Sophie, to share my thoughts on this topic. So I think first, to start with, what's from our perspective the very big picture, where will financial market industry go to? So I believe, on the one hand, tokenization, looking at the asset side, going forward will become the standard. So no global physical document anymore. Tokenization, the key benefit is also programmability of assets, programmability of cash. So that's point number one. Point number two, we see a tendency going into 24/7 trading. So imagine you are a treasurer and you have cash inflows on a Saturday or on a Sunday. Why to wait until Monday to let your money work for you? So that's the second point. And the third point, I was already addressing it in my brief introduction. We will have significantly shorter settlement cycles. I'm not sure whether we will have atomic instantaneous second zero settlement, but I'm a strong believer that we will have a near time instantaneous settlement. So that's the basis thesis we have for the future. And then what benefits does it bring for individuals in the ecosystem when we're looking from a treasury perspective? Going forward, you will have the ability to collect interest not only on a daily basis, but on an hourly basis. So as a treasurer, when you are long cash in the morning at 8, you know you have to make a payment in the afternoon at 4 o'clock. Today you are stuck. You keep your money in your box, not earning interest for you. Going forward with the 24/7 trading, with the near second zero settlement, you can earn yield on a minute by minute, on an hour by hour basis. That's point number one. Point number two is collateral. Big theme in our industry, collateral mobility. So even in a world which is not fully tokenized, going forward, you will have the ability, and these are offerings coming from DTCC, the US ICSD, and also Euroclear and Clearstream fairly soon. Just by clicking a button, you can tokenize a fraction of assets you are holding, and you can instantaneously transfer these assets as a collateral. So today, when pledging collateral, fairly often you make use of cash. Cash is, so to say, the kind of most important asset, regardless for a treasurer or for an asset manager, because we want to invest cash in assets to earn, generate performance for our investors, and you do not want to use cash as a collateral. So going forward, by making assets smart, so to say, you have the ability to pledge, easily pledge assets you have in your portfolios as collateral. And most important, when having these near second zero transactions, there's a requirement to have digital cash. And that's where wholesale CBDC comes in play. For us as an asset manager, we do not have direct accessibility to target 2 accounts, so therefore we indirectly benefit from wholesale CBDC by making use of tokenized deposits, for example. We have with our custodian, and that's one of the key benefits I see from an asset manager's perspective. I was addressing the shorter settlement cycles, taking out significant risks. Also to share here some examples. A couple of years ago, we've had German pharmaceutical company Bayer. They were issuing a bond in the US. This was on a Thursday. Settlement was T+5, so a Thursday later. And Bayer, they had to come with a profit warning over the weekend due to some medicine which wasn't properly working, and the stock opened on Monday, Frankfurt Stock Exchange, with a minus of 20%. And asset managers, having subscribed for this bond, given the fact that there was a T+5 settlement, they were stuck. They couldn't make anything. They couldn't sell. They just were stuck. And another example, when looking at the Credit Suisse crisis, which also was occurring
Makes
over
it very obvious what you're saying.
a weekend, having sold bilaterally transactions, bonds with Credit Suisse on a Friday over the weekend, so T+2 settlement, Tuesday over the weekend, you haven't had any clarity, will this transaction settle or will I still left with a long position in bonds? And therefore, shorter settlement, immediate permanent accessibility to the assets is a key requirement, and DLT will be highly supportive in this case.
Yeah, thank you. From the perspective of an issuer like KfW, where do you currently see the biggest gap between what is technically possible and what is actually used in practice?
Maybe to give also one example, if we trade, for example, a bond in Australia, we usually have also a T+5 settlement. And what we do basically on the trade day is we enter a swap, because we do not want to profit from the currency margin. We decide it's the right currency to issue in, and then we swap it into euro. For the 5 days, we are paying for the swap, so the market to market, although we are not having liquidity yet. So that's something we have to hold equity against, and so on. So this is something which is, a timing problem, and as Christoph also said, you can't do anything in between in the times. You just have the risk to accept it and to pay for it basically with regulatory capital. But in general, I must say, as I said before in the first example, is what we are seeing is usually a trade done between two parties. So it's very easy, very uncomplex, of course. If we are really looking at the world, it's more complex, so more parties involved. And I think we have to come together as an industry in order to understand basically what should be common and shared and what should not be common and shared. And I think a network where we don't need to reconcile is something worth to think about. And therefore, having a network where we can work together, it doesn't have to be one, it could be several ones, especially looking at regulatory aspects. I think there will be a European one at least, and a US one and an Asian one. Doesn't make sense to have everything on one thing, but there could be alternatives, like a private one, a public-private one, also a public shared ledger. And one thought is, if I found a bank, or if I would found a bank now, would I think, do I have to buy a power plant now to power all my electricity? No. It's a commodity, and I just go to the socket. I just have to pay for it basically, but I don't have to produce it. Do I have to create a new internet? Probably not, because it's already there, so I build on this. So the question basically is, what is the commodity in the future, and the network where we operate, where we do not have to reconcile, could be one of the things where we come into commodity space.
Thank you. And there we come to Pontes, right? The bridge between the settlement infrastructure and the DLT. Adeline, do you want to deep dive a little bit into Pontes and maybe have an outlook to Appia?
Yes. So, as you know, during the exploratory work in 2024, we tested 3 solutions to settle financial transactions on DLT in central bank money. So the first one was a trigger solution to directly trigger a payment in target 2. The second one was the hashlink solution to directly trigger a payment in tips, which is also part of our target services. And a DLT-based solution to make a payment directly in central bank digital currency, so with a token of central bank money. And this is an interoperability model with DLT markets. So the Eurosystem, we issued in 2024 our CBDC on our DLT, and we had transactions with DLT market operators and the industry could issue their financial assets on their DLTs. So this is an interoperability model with DVP in between, and so we will continue with Pontes with this model first, as we also have a time to market constraint, and there is an urgency to provide central bank money in the tokenization area to the industry could leverage the central bank money and provide their own services. And that's why, as I mentioned before, based on the success of this exploratory works, by the end of this year, and by the end, actually, of the third quarter, the Euro system will provide central bank money on DLT to directly settle financial transactions issued on DLT and for your business. So we are going into production. That's important. It's very important, and so meaning that the ECB and the Euro system will be one of the first central bank in the world to provide central bank money on DLT with Switzerland also. And so, for instance, in France, we have a project called Pythagore with our CSD, Euroclear France. And this project aims to tokenize short-term negotiable debt securities and to modernize this short-term debt market through an interoperable DLT platform and settlement in wholesale CBDC, with Pontes. So this is by the end of this year, end of the third quarter. We will go into production, and that's why you mentioned in introduction, you mentioned this service description document, about 90 pages, and so this is a very important document to connect to Pontes. But I would like also to mention that in relation to what you said before, this is the foundation with CBDC to prepare a global tokenization market. And of course, we will provide CBDC by the end of the year, but we will not change the policy access to central bank money. And CBDC is central bank money. And so we will have, it's crucial to have an appropriate central bank money in the tokenization sphere to support the development of tokenization. But central bank money is not intended to meet all the settlement asset needs. And as we have today, we also need commercial bank money and private settlement assets in the tokenization sphere. So that's why we also need commercial bank money to ensure the financing of the economy as it is in the current world. So it's important in relation to our sovereignty to have these tokenized deposits or euro-denominated stablecoins issued, of course, by a regulated financial institution. So yes, I fully agree with you.
Thank you very much. So Marco, if Pontes were available tomorrow, how quickly could SDX connect to Pontes?
Tomorrow? No. Well, I mean, okay, let me abstract a bit away, because as I mentioned earlier, I think there are differences, of course, across geographies, and obviously also differences across market infrastructures, you know, in terms of readiness and operational, technical readiness and all of that. And let me take, I mean, obviously one of the first criteria is obviously, as usual, about regulation, you know, having regulation available and enabling certain models, business models, and tokenized models, so to say. But let me put that aside for a moment. I think, I mean, this dual track strategy, I think, is very good to enable something, you know, some results and some connectivity early on, while having a long-term view, a long-term plan, also for more seamless interoperability in the longer term. I think it's obviously there are differences, as I said, on the market infrastructures, but many players have, especially financial market infrastructures, not only SIX, but also Euroclear, Clearstream, and others have collected a lot of experience in this space in the past. The DLT market operator, obviously by nature. So I'm hopeful that this can be, can be happening in short time in that sense, with obviously differences in that space. And no, I mean, coming back to the point, I mean, there is a strong demand from the private sector to have a solution in place. There is, I think, the public sector with a lot of activity and I think recognizing also that demand out there. So as long as I think the work is harmonized and aligned between the two spheres, then I wouldn't see big obstacles in that space, which is good.
Yeah, thank you. Looking at the time, I would like to look a little bit at Appia as well. So if Appia succeeds in creating a new settlement architecture in Europe, what would make it competitive globally? What would need to be in place for international financial institutions and markets to connect to it? And I would ask Bert first.
Yeah. Thank you for the question. To be honest, my understanding of Appia is that it is a process, basically, rather than a product. And it's supposed to enhance, Pontes. Maybe, coming to another, product in the end, but it's not as such as a product. It's more a way to arrive at an infrastructure which could be, future-proof. So
I see Adeline has something.
Yes.
She wants to say something.
Yes, yes, you're right. Pontes is a product. We will be in production by the end of the year. And Pontes, okay, is a long-term track, but starting now. And so with Pontes, we will have CBDC. We will have also services around CBDC, as with Pontes also.
I think we agree.
With Pontes.
Pontes is a product which is integrated into.
And Appia is to design the future of financial market in Europe. So we will not do it alone. We need because the ECB with T2S we focused on the settlement, but here with Appia we need to look at the whole value chain, so from issuance to custody, and so we will not do it alone. And so Appia will leverage Pontes, and at the end we will combine both,
yes.
Because it will be the same. It's the same project.
I think that's what we have learned from the experimentation phase, that coming together as a market and to understand basically what one needs, for example, the safety and as well as the policy measures which needs to be implemented via the Eurosystem. On the other hand, the demand from the market, especially clarity on timing and stuff like this, is very important. And I think this is very helpful that we are coming together, that we are working together in one direction, especially for us. And regarding Appia, we need to make sure that we see where it goes, in which direction, especially looking at our IT systems. If we need to change anything in the IT, it takes a lot of time before we can really do this. And therefore, it's very important to know in which direction it is going and what are the key features on the one hand, so where we can use it, and on the other hand, you have regulatory certainty. That's very important, and therefore we are looking forward to see basically what is brought out, and our request is basically to make it as concrete as possible in order to make decision now, which can be now helpful in the further stage.
Thank you, Christoph. What is your opinion on that?
I think here in Europe we are absolutely on the right path with wholesale CBDC, and with this, it's not really a two-track approach as the ECB was saying. It's one single program, Pontes and Appia, and I think it's a clear competitive advantage that we do not go like the Americans all in on stable coins, which from my perspective carries significant financial market risk, and that we have a highly trustworthy anchor by the ECB, by the public sector, and then we have private solutions tokenized deposits and stable coins around it. But as a key economy here in Europe, there's a clear requirement of wholesale CBDC, and it's fantastic to see what the ECB has delivered in such a short period of time. And also important is the communication with the market. So as Union Investment, we are also part of the contact groups of Pontes and NTW, so where we discussed Appia most recently. And I think this consultation to get input from all the various market stakeholders and then to put it into a product, that's really key for this great success story.
Thank you. I would like to open up for questions. Are there some in? Thank you. No questions. So I have a closing question. If we met again in 5 years, what would the headline be of today's panel? Ladies first.
The success of Savings and Investment Union with Appia, of course. And yes, maybe yes to mention that I fully agree, of course. But yes, Appia, we start now. It's important, and we need all the industry to progress. And that's why we published at the beginning of this month our roadmap for Appia, and we will enter now to exploratory works with the industry. And yeah, because we have this interoperability model with Pontes, and as you mentioned, we can evolve to meet the objectives of the Savings and Investment Union, to, for instance, to an more integrated model. But we will not do it alone, and we need a public-private partnership, and we need to work on it together to avoid, yes, investments and yeah.
Thank you. Christoph, what would be the headline of this panel?
I would like to rephrase what Trump says in MEGA, Make Europe Great Again. I think we are absolutely on the right path here, looking at the payment side, looking at the asset side, and it's a fantastic collaboration. We have public and private sector, and we would just have to speed up and to stay on this track.
Thank you. Bert?
After the successful implementation of Pontes, how Appia basically has enhanced the beginning of the service, of the paying service.
Thank you. And Marco?
I would say experiences collected in a resilient and future-proofed European financial system, I would say. I think, yeah, by then, plumbing will be there, use cases will be demonstrated, and actually daily life, and so there will be more demonstration and experiences sharing, also in combination not only with DLT and tokenization, but AI, for example, agentic AI, how does it combine to provide secure services?
Thank you. So I guess we have a date in 5 years. Thank you.
Thank you. Thank you. Thank you. That was our panel on the progress of Pontes and the ambitions of Appia, and it was quite interesting. Thank you for the insights.